PayPal's Q1 report is out and the results are glaringly clear. This company is firing on all cylinders. On top of that, you have an extremely transparent and accountable management team positioning it for years of success moving forward. Hey guys, hope you're doing well out there. It's time to catch up on the story of PayPal Holdings after they reported their Q1 results. We'll get into all the high-level numbers from a revenue, earnings, and cash flow perspective. We'll also take a look at the important metrics this company lays out in terms of payment volume, transactions, and active accounts. We'll also jump into the guidance provided by management for the upcoming quarter and the upcoming full year and see how that lines up with estimates on Wall Street. We'll jump into the important metrics over at PayPal, take a look at the free cash flow, which I think is a number far overlooked with this company and in my opinion not given enough credit. We'll jump into all the assets, liabilities, financials I think you need to know, and then take a look at it from a chart perspective. This one finally seeming to have reversed its downtrend. We'll highlight some levels where I think you can be a buyer in shares of PayPal and likely where the stock is headed. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of PayPal down close to 10% over the past 1 year, and over the past 5 years also down close to 40%. So you have significant underperformance from this one, at least compared to your average S&P 500. But over the past 6 months, you do have shares up close to 33%. So is PayPal stock showing signs of a bottoming? And is this business really showing signs that it is turning around? On top of that, you still have an extremely compressed earnings multiple at just 13 times a price to earnings. So PayPal really continuing to have room, at least on that earnings side, to expand its multiple and grow its valuation. On top of that, you have revenues coming in at $7.7 billion in the most recent quarter. That was good for 9.4% growth year over year. Did beat estimates on Wall Street by right around $180 million. In terms of non-GAAP EPS, that came in at $1.40. Estimates on Wall Street were closer to $1.22. In fact, the high end on Wall Street was at $1.27. So PayPal coming in significantly ahead on the earnings side, at least compared to what Wall Street had anticipated. Now, in the previous quarter, PayPal did make the decision to start including stock-based compensation and some other employer payroll taxes as part of the non-GAAP EPS results moving forward. And so accounting for those stock-based compensation, you got an EPS figure of $1.08. So PayPal making that decision for transparency and accountability moving forward. Personally, something I do tend to like. For simplicity, today we'll take a look at their $1.40 non-GAAP EPS based on their prior methodology, simply because it's easier to compare it to what Wall Street had anticipated. Moving forward, they're expecting $1.21 in the upcoming quarter. On that non-GAAP EPS side, if we look ahead to what PayPal guided for the upcoming quarter, they're expecting low double-digit growth, and that's really where Wall Street also had their growth pegged at, close to 4 to 5% on that earnings side. In terms of that revenue side for the upcoming quarter, Wall Street expecting right around 7% growth, with revenues coming up to $7.8 billion. PayPal also guiding for right around 6.5 to 7% growth on that revenue side. So basically coming in line with what Wall Street had anticipated. For the full year, expecting mid to high single-digit growth on that bottom line, and then nearly $5 billion in free cash flow. If we look ahead to what Wall Street was estimating for the upcoming year, they were basically expecting no growth on that bottom line. So I think PayPal coming in slightly ahead of what Wall Street is guiding for, at least for the full year. And keep in mind, this comes in the context of a forward multiple of just around 13 times for this year, and then looking ahead to 2025, close to a 12 times earnings multiple. So certainly if PayPal can come in here, grow at even just a 5% clip on that bottom line, yeah, this earnings multiple is certainly looking compressed, and that valuation is in your favor if you're looking to get into shares of PayPal. On top of a lower valuation, you're also getting a company that's continuing to grow on its key user metrics, and that is total payment volume, otherwise known as TPV. This is really the amount of money flowing through PayPal systems, and that increased nearly 14% year over year, up to $404 billion. Along with that, you also have payment transactions up to 11%, and then payment transactions per active account, or TPA, that is also up year over year 13%. Now, the one thing you do have declining over at PayPal is the active accounts, and that year over year did tick down 1%. And this is something that management has made pretty clear over the past few quarters, is that they're looking to churn through active accounts that really aren't active, in all honesty, and they're looking to keep the existing active users continuing to use PayPal more and more. And that's really shown through your TPA, or transactions per active account. The fact that this number is continually rising, in my opinion, a good sign for PayPal. On top of that, sequentially or quarter over quarter, you did still have a rise in your active accounts roughly by 0.4%. So some things to like: the fact that transactions per active account continuing to rise, total payment volume continuing to grow at that healthy low to mid double-digit clip, and the fact that they're continuing to churn through inactive accounts. On top of that, you have PayPal being positioned for long-term success as shown by the management team. So they're really focusing on driving results and shown that this is a transition year over at PayPal, where they're looking to focus on innovation, focus on execution, and then controlling costs as they move along, really making their business more efficient. And so part of that includes focusing on branded checkout, as that's a part of their business that has really lagged behind over the past few years, and they're looking to once again accelerate the branded checkout business, which is a higher margin business over at PayPal. So if they can look to grow their branded checkout faster, would prove to be better for their margins. On top of that, focusing more on profitability. This is a company that's sort of let go of the ropes on profitability over the past, and part of that also includes the more transparent stock-based compensation as part of the non-GAAP results. So I think this company really focusing both employees and management incentive plan metrics to profitable growth in order to create shareholder value. On top of that, the main focus for management remains operating more efficiently. They are looking to exit and divest out of places where they're really not seeing enough growth and focus those resources on places where they can honestly create more value for their customers. So I think a lot of things PayPal doing right and moving in the right direction. And speaking of moving in the right direction, a lot of signs are showing that PayPal over the last 3 quarters continuing to move in the right direction. Really, Q3 of 2023 is where we had Alex Chriss come in as the new CEO. We had a big management change, and over the past 3 quarters, you've seen revenue once again steadily tick up on its year-over-year growth rates. On top of that, you also have transaction margin dollars, which were declining in the early half of 2023. They're once again on the right track, where you are seeing transaction margin dollars growing once again on a year-over-year basis. On top of that, you also have non-GAAP EPS continuing to accelerate, as you had deceleration in the first half of 2023, and then once again seeing that acceleration on bottom line profitability, largely due to expense discipline and accelerating their share repurchase program. So some things to like: the fact that management stepped in Q3 of 2023, and you're seeing metrics trend in the right direction, really all across the board. The other important thing with PayPal is their free cash flow figure, and in this most recent quarter, that came in at close to $1.8 billion, representing 76% growth year over year. You adjust that for their one-time impact of the sale of their buy now pay later service, and you're sitting at roughly $1.85 billion worth of adjusted free cash flow in 1 quarter alone. And so again, that was growth of 86% year over year, just a strong free cash flow figure, out of which they're returning back to you, the shareholder, in the form of share repurchases, as they bought back roughly $1.5 billion of common stock in this most recent quarter. Over the past 12 months, they bought back roughly $5.1 billion and reduced the shares outstanding by close to 5%. We'll see that when we come over to their statement of income, that fact that shares outstanding have significantly come down. On top of that, in terms of this company's balance sheet, you're sitting at roughly $17.7 billion in cash and cash equivalents, and that's balanced out by right around $11 billion in total debt. And so this company, from a financial balance sheet perspective, looking pretty healthy, as you have close to $63.7 billion in total current assets. That's balanced off by roughly $50 billion in current liabilities. And keep in mind, a lot of these are the funds payable due to customers, basically the funds kept in their PayPal wallets and PayPal accounts, and that also shows up on these accounts receivable line items. So sort of cancels out. And so you have really $17 billion in cash and short-term investments, balanced out by roughly $11 billion in long-term debt. So from a balance sheet perspective, PayPal in a very healthy position moving forward. In terms of the statement of income, you have revenues growing close to 10% up to $7.7 billion. Last year, you were sitting closer to $7 billion. And then in terms of your operating expenses, you have your transaction expenses rising up to 3.9. Last year, we were closer to 3.3. And so you do have some level of transaction expenses growing as your net revenues grow, similar to how Amazon has the cost of revenues and the fulfillments grow as the revenues grow. So this line item, sort of a fixed cost over at PayPal. It's really all the other places where they can look to control costs on an operating basis. And that's exactly what we see, as we have transaction and credit losses declining year over year. We have customer support also coming down year over year, sales and marketing expenses coming down year over year, technology and R&D taking up essentially flat year over year, and then you have SG&A also ticking down on a year-over-year basis. So really along all of their line items, except for the fixed cost of goods, essentially the transaction expense over at PayPal, they did a fantastic job controlling the operating expenses, driving more operating income to their bottom line, as they posted close to $1.16 billion in operating income. Last year, they were right at $1 billion. So from a statement of income, all things looking good over at PayPal. The fact they're able to control costs, drive more efficiencies, really what management has been saying over the past is coming to fruition. And that resulted in close to $900 million net income figure. Last year, we were sitting at just $800 million. On top of that, you do see the weighted shares outstanding declining pretty rapidly on a year-over-year basis, and that's largely because of PayPal's large share repurchase authorization. From a cash flow, we pull down that nearly $900 million net income figure. We get to add back some depreciation, some stock-based compensation, not really budging all too much, something we like to see. And so we get to an operating cash flow figure right around $1.9 billion, significantly higher than last year, where we were closer to $1.17 billion. Now, like we said, this company doing a ton of share repurchases, and that shows up in the financing activities right under the line of purchase of treasury stock. So last year in the same quarter, they bought back close to $1.4 billion. In this most recent quarter, they accelerated that and bought $1.5 billion of their common stock. So a high majority of that operating cash flow coming back to you, the shareholder, in the form of share repurchases, certainly something that's good to see over at PayPal. Speaking of things good to see is also the stock price reversing, as you had shares bottomed out close to $50 back in October of 2023. Now you're sitting closer to $67. This company was locked in a pretty textbook downtrend, I would say, as you were making lower highs and lower lows in a pretty consistent pattern. And once you came up here closer to $65 a share, you made a high that was higher than our previous set of highs at close to $63, $62 a share. And then you back tested that with a higher low right around $58 a share. And so at this point, you had confirmed a higher high and a higher low, really showing signs of a reversal. And that trend has shown to continue over at PayPal, as you once again made another set of higher highs, and seems like you once again made a set of higher lows. And this company really is in a textbook uptrend at this point, where I would expect this company to continue trending higher through a set of higher highs and subsequent higher lows. It had become pretty apparent that this company just simply needed a little bit of time in order for management to prove that they were able to operate this business more efficiently and continue to position it for long-term success. I think we're seeing the results of that come to fruition now, and this company is certainly headed in the right direction, both from a technical and fundamental perspective. I think shares of PayPal can continue to be acquired on dips in this uptrend, and certainly if you are looking to preserve some of that capital, I would set a stop loss just in case you have shares of PayPal come in here and break through this level of support. All things considered, though, you have this company continuing in the right direction from its fundamentals, as you have growth along all of their key metrics, and then on top of that, you now have a trend reversal in the technicals showing signs of a uptrend moving forward. That was my take on shares of PayPal. One, I am bullish on moving forward due to its continued growth both on the top and bottom line, supported by a compressed valuation, and now once again supported by an uptrend. Let me know your thoughts on this one in the comments section below. As always, thanks so much for listening, and I'll catch you guys in the next video.